I'm sure most of you are aware of the term common law partners. Most people would understand that to signify a couple that live together but aren't married. In the eyes of the law, however, common law partner doesn't actually mean anything at all. Since the Marriage Act of 1753, to be legally, financially combined with someone, you actually do have to get married or have a civil partnership. You need that certificate to confirm that that is the case. Being married does give you certain benefits in terms of switching funds between yourselves without any capital gains tax liability, but the biggest treatment, where the biggest difference, is on death. If someone dies while they are married, their nil rate band, that is the amount of their estate that won't be charged inheritance tax, transfers to the surviving partner with no immediate initial charge. If you're not married, however, you cannot transfer that nil rate band. Therefore, that £325,000 in your estate won't be charged at inheritance tax, but anything above that will be. The worst situation you'd have is maybe a couple that don't have much cash around but have a very expensive property. In that situation, the surviving partner might be having to come up with a large amount of money to pay an inheritance tax bill when they haven't got much handy to do so. Yes, you could raise it as a mortgage or you could sell the property, but it's not ideal. I've got some clients in this situation and they've said to me, well, what can they do? I mean, there's various things you can do using trusts or gifting money, or there's various options, but sometimes the best option is just take the plunge and go and get married, I'm afraid. Let me know if you need me to go and buy a hat.